All right, what's up, everybody? So today we are going to talk about the pros and the cons of infinite banking. And first, I really want to start off with the cons, get those out of the way. And to be honest with you guys, I don't actually feel like these are cons. Once you understand the concept, you'll realize I probably fall in line with Shawn as well. Not really cons. So let's go ahead and get started. Con number one would be the speed at which we have access to the liquid funds. Now, let me explain what I mean by that. Most people are so used to their normal banking system. You've got your checking account and your savings account over here at Capital One. And let's say you've got some money sitting in your savings account and you want to transfer that money over to your checking account so you can spend it. You go on your little app, you do a quick transfer, that money is there essentially instantly, and you're good to spend it. You have a debit card, you have a credit card, you have whatever means of pulling that money out without actually having to get access to cash. That's what people are used to. Now, in all reality, a lot of people have at least two bank accounts, two different accounts with two different banks. I'm going to use me for an example. I have three. One of them is Capital One, and another one is Chase Bank. So when I take money from my Capital One account and I send it over to my Chase account, I'm sure you guys do very similar things. I have to pay this card off over here. I have money over here. That money takes a few business days. I mean, 2, 3, 4 business days, sometimes possibly longer, depending on how quickly they're moving. So when it's going from bank to bank, that system is not immediate. That's something they make us wait on. When you get paid from your job and that money gets direct deposited into your account, they're actually paying you a few days earlier, which is why some people at your job may get paid quicker than you do, because each bank processes that information at a different speed. So the reason I say that is, if you're looking for something that happens instantly, well, infinite banking might be a con for you. But for me, it's something I'm used to. 2 to 3 business day turnaround to get money into my account after requesting it, that's pretty normal. But we'll go ahead and mark that as con number 1 for right now. Con number 2. So the con would be cash crunch at the beginning of your policy. So when you first start off your policy, you have what we like to call a cash crunch. Really, all that means is the money that I'm putting in at the beginning, I don't have full liquidity or full access to, let's say. So when I put in that dollar may be only making me 10, 20, 30 cents, something along those lines. I'm going to compare this to starting a business. When you go and you start a restaurant, do you expect to open your doors up and from day one be profitable no matter what? You've got a ton of money coming in, you're always in the black, everything's going great. Let's be honest, if that's how everybody's business work when they open it, nobody would ever go out of business. But you're in that capitalization phase, you're in that growth phase, you're in that break-even phase at the beginning when you're starting your new business. I want you to think of starting your own bank the same way as starting your own business. At the beginning, you're building the foundation of your policy. You're making sure that the structure is going to be able to really provide you with the long-term benefits, the growth, the income that you're really looking for in your own banking system. Now, the great thing about IBC is your bank only gets more and more and more efficient as time goes on. So yeah, maybe in the first few years when I put in that dollar, it only returns me 15 cents, then 30 cents, then 40 cents, then 60 cents. But once I hit that break-even point, once I hit that cash on cash year, not only was my policy getting more efficient up to that point, but now I'm in the black. Now everything it does for me is all profit from there on out. I'm talking about putting in $1 and it spitting me out $1.10. Putting in $1, it's spitting me out $1.25. Putting in $1, it's spitting me out $2, then $3, then $3.50. Imagine that on a large scale. If I was putting $10,000 into my policy every year and it was returning me $13,500. If I was putting in $100,000 every year, and it was returning me 150,000, so on and so forth. So you take the time to build the policy, you invest the time and the money needed into your bank while it's still giving you all of these other benefits on the back end, and you will see that you have a contractual guarantee that your policy is going to get more and more efficient every single day. Once you hit that break-even point, if that's what you're focused on, which I am not, you know every time I put money in, it's kicking me more money out. So those would be the two cons I believe infinite banking has. I don't think they're cons, but I'll leave that up to you. Okay, now for the fun stuff. Let's get into the pros. So, pro number one is guaranteed future forecasted growth. It is in your contract that they can show you that your participating whole life policy will be growing by this amount every year. We're not talking about the addition of dividends or anything like that. We're just talking about what is guaranteed in the contract. So I know no matter what, if I keep paying, more money keeps showing up. I love that. Number two is going to be dividends. I love dividends. So we just talked about the guarantees that are going to be in your policy. Let's talk about that extra that can go on top of the guarantees. Now, a lot of people will tell you our company's dividends is this, our company's dividends is that. Let's not get down to whose dividends are what. Let's just talk about history. What really matters is how long, how consistent have you been paying out dividends? And the companies we use have not missed paying out a dividend to its policyholders in over 100 plus years. So I'm not going to sit here and say the dividends are guaranteed, but I'll let you kind of decide that for yourself. Number three, safe money, no risk. One of the best things about a participating whole life policy and utilizing it for infinite banking, you have zero risk. There is absolutely no way that your money is going to go backwards in the policy. We're not in the market, your money's not being invested somewhere else. There's no risk whatsoever with your infinite banking policy. I love that. I'm not a big person with risk. I don't gamble, I don't do these other things. I like no risk. Number four is it's liquid. And that's a great thing because we all know emergencies pop up and I need to get access to money, but also opportunities pop up because when you have money, when you have access to cash, opportunities seem to find you more often than not. So another really cool thing is that money that's in there, that liquid cash, is growing and growing and growing. Just like I said, you got the guarantees in there that this thing is getting more efficient at making you money on a daily basis. Tax-free money. The money that is growing in your policy is tax-free. You're going to be able, and we will show you how to access that money tax-free, whether it's through loans in the beginning, withdrawals later in life. A properly structured participating whole life policy will give you the option to do both, and both will be tax-free. Number five, using your money more than once. This is awesome. So when it comes down to it, I'm putting this money into my banking policy for the reasons of banking. I want to be the bank. I want to be able to use this money for financing the things of my daily life. So if you weren't already aware of this, when you're taking out loans from the life insurance policy, you're not using your money, you're using the life insurance company's money. So the money that you put in is still growing at whatever rate it's growing at, and you'll never be touching that unless you take a withdrawal. But that means I can take money out of the policy, go make more money with it, while my original money is still growing and growing and growing, earning continuous compounding interest, which we'll talk about here in just a moment. Number seven, provide passive income in retirement. And whenever you decide to retire is going to be completely up to you. We're not saying it's 62, we're not saying it's 65, but properly structured policy can provide you with tax-free passive income in retirement. I think that's a pro if you ask me. Number eight, here's one that a lot of people might not really think about. One of the great reasons to have a participating whole life policy is asset protection. And what I mean by that is Your policy, your death benefit, your cash value, everything within inside of your contract cannot be litigated against. And what I mean by that is somebody can't come after you. Let's say that somebody's trying to sue you. We're in America. People love suing people here. But if somebody does sue you, they can access a whole lot of your other assets. They're not going to be able to touch your life insurance policy. Now, rules may be different in a few states here and there, and we'll help you understand that. But in most circumstances, that is going to be completely protected. Next up, we have continuously compounding interest. I love continuous compounding interest. So basically, when I put my money into the policy, it's going to be working for me for the rest of my life. Anytime I add more money into the policy, that amount grows along with the growth from the guarantees and the dividends, and that's going to be working for me for the rest of my life. Anytime I loan money out of the policy, that is not affecting my money. Remember, I'm loaning from the life insurance company. My money is never touched unless I withdraw it. So my money sits in one bucket. I loan from the life insurance company. That means this bucket of money is continuously growing and compounding, earning interest on a yearly basis. Continuous compounding interest, that's a pro. Next up is total control. I love having control over my system. What I mean by that is I'm the first in line. When I need money, I get access to money. The next thing is when I loan money out, unlike a bank or really anybody else that's going to loan you money, if you miss out on a loan payment, if you don't pay the right amount, for whatever reason, that company, that bank, whoever it may be, you're going to get a late fee charge. They're going to be coming after you. They could seize your home, whatever it may be, whatever the loan may be. There are very set in structured rules to you paying back your loan. With your infinite banking policy, you make the rules. You should pay it back. You can pay it back, but you don't have to pay it back. If you want to practice good banking, you pay your loans back. But the cool thing is, you do that when you want to do that. Now, you're not going to get any text messages, any emails, any phone calls asking Mr. or Mrs. So-and-so to please pay back the money that they've loaned out from their policy, because no one is asking you a single question about what you're using that money for, how long you need that money for, or when you plan on paying it back. You're in control. It is your bank. You run the system. Next up is easily transferable. So if something happened to me, or I wanted to go ahead and transfer ownership of my policy, my infinite bank, over to a spouse, a child, somebody else, whoever I decide, I can go ahead and do that. And it's a pretty easy process. Easy to manage. I like this because infinite banking, once you really understand what's going on and you see the behind the scenes of your account, your login information, all of that stuff, it is so easy to manage. I think sometimes people get this complex idea in their head. I'm going to be honest with you, it couldn't be easier. Taking loans, paying back loans, all of that stuff, it's essentially just like you're doing it with your normal bank. Not taking loans. Taking loans are very tedious with your normal bank, but I'm talking about going on and requesting money from your checking account to your savings account, something like that. It's a super simple process, so very easy to manage. Oh, I love this. Another pro here, no hidden fees. I know a lot of these things are going to charge you fees here and there. Fees are going to increase. They're going to be for this, that, and the other thing. With your participating whole life policy, there is the contract. The contract is the contract. You will pay exactly what it costs to have your policy. Now, there is some fluctuation in what you're allowed to pay, because you can go up and you can go down on certain things, and we can help explain that to you. But as far as fees go, as far as cost of insurance goes, all of those other things, they are already built in to what we show you at the very beginning when we're getting you started. Nothing will ever change, and that is contractually guaranteed. Another thing I really love is, and this is for us specifically, we work with companies who have a strong history of being on top of their game. You want to work with companies, there's a lot of insurance companies out there, some really good, some maybe not so good. We specifically work with the best of the best companies out there, and not only that, but the companies that like and want you to practice infinite banking with your policy. That's a huge thing here. They support us, and so they make it easy to become your own banker. I think that's a huge pro. Another pro, it's completely private from the public, the IRS. If you go and take a loan out from somewhere, let's say you go down to your local bank and you take a personal loan. You know what's going to happen? That's going to show up on Credit Karma. You know what happens when you go to your Infinite Bank and you take a loan? Nothing, because that's not tracked by anyone outside of the life insurance company, and they're sure as not telling anybody about it. So, complete, total privacy. Absolutely love that. And last but not least, one of the best features about this at the very end, or at the beginning or in the middle, God forbid something happens to you earlier rather than later, but when it's all said and done, when you've been using the absolute crap out of your policy and that thing is humming, it's got this massive death benefit in it because you've really been becoming the banker, you've been paying yourself back, you've been on top of your game doing all these things. Your family is going to get a nice tax-free death benefit that pays out to them when you pass away. Set up correctly, this is going to avoid probate, which means your family's getting that money quick, fast, and in a jiffy. No hoops to jump through, none of all this crazy, wild stuff that you see going on when people pass away with their IRAs and all of that jazz. I could go on and on, but the life legacy that you're able to leave behind to your family is a huge, huge pro. Now, if you've done your family right and you've set up other policies, we call that a windfall of cash, and they're going to use those to help continue to fund their policies and start new policies for others. All right, so those are the pros and the cons of infinite banking. The cons. Let me know what you think in the comments below. Let me know if I've missed anything. Really, at the end of the day, we're just here to educate. Remember, everything is based off of this book right here, Becoming Your Own Banker by R. Nelson Nash, the 5th edition. Highly suggest you head on over to Amazon, pick yourself up a copy. But I do like to do these little questions at the end of my video to get to know the people who are watching a little bit better. So my question of the day is regular French fries or sweet potato French fries? You let me know in the comments below. Head on over to our website at legacylifeandretirement.com. Book a call today, completely free. We look forward to chatting with you, answering any questions you may have. I hope you all have a great rest of your day.